All right, let's dive right in. Today, we're breaking down what was frankly a monster of a quarter for Intuitive Surgical. Their Q3 earnings didn't just meet expectations, they completely flipped the script on the company. And the market's reaction? Well, it was absolutely explosive. Right out of the gate, after the numbers hit the wire, the stock just went vertical in after-hours trading. We're talking a surge of nearly 19%. A move that big tells you something really, really important just happened. So what exactly caused this explosion? And what's really crazy about this is how much it caught everyone off guard. The options market, which is basically Wall Street's betting parlor for how much a stock might move, was only pricing in about a 7% swing. The stock almost tripled that. This wasn't just a beat. This was a complete shock to the system. Okay, enough with the drama. Let's get right into the numbers that sparked all this excitement. What did Intuitive actually report that got investors so fired up? So here are the big headline figures. Revenue came in strong at $2.51 billion, easily clearing the $2.41 billion analysts were looking for. But wow, look at the bottom line. Earnings per share hit $2.40. The street was expecting just under $2. That is a massive 41-cent beat, just huge. And that's really the key takeaway here. A quarter like this does more than just give the stock a temporary boost. It fundamentally changes the entire conversation around the company. This was a true statement quarter that pretty much silenced all the critics and reset the whole story for Intuitive. Okay, so we know the headline numbers were great. But why? What was really humming under the hood to make that happen? Let's pop the hood and really dissect what powered this incredible quarter. Well, it really all comes down to procedures. This is the absolute core of Intuitive's business model, and it is on fire. Total worldwide procedures grew a huge 20% year over year. That's the lifeblood of their recurring revenue, and it just shows incredible, powerful momentum. And it's not just procedures. Hospitals are putting their money where their mouth is. The company placed 427 of its Vinci surgical systems this quarter. That's a really strong number, and it tells you that hospital execs are confident in the long-term plan. And hey, don't just take my word for it. The CEO, Dave Rosa, basically said it himself on the call. He called it an excellent quarter, and he pointed to strength across the board: procedures, new systems, and getting more use out of the robots already out there. This wasn't just one thing going right. The whole business was firing on all cylinders. And this slide, I think, really breaks down that growth engine perfectly. First off, the new Da Vinci 5 system is taking off like a rocket. It made up more than half of all new placements. That's driving a really strong upgrade cycle. Then you've got their Ion platform for lung biopsies, which is just soaring. Procedures are up 52%. And on top of all that, hospitals are just using their existing robots more often. It's like this perfect storm for growth. Look, a great quarter is, well, it's great, but what Wall Street really cares about is what's next. So let's turn to the guidance, because this is where the story truly fundamentally shifted. Now, there's a term for what Intuitive just did in the investing world. It's called a beat and raise, and it's pretty much the strongest signal a company can send. It's them saying, not only did we knock it out of the park last quarter, but we're so confident about the future that we're actually raising our own targets. And here's exactly what that raise looked like. They bumped up their full-year forecast for procedure growth, and maybe even more importantly, they nudged up their forecast for gross margins. So you've got higher growth and higher profitability. That's the combo that investors absolutely love to see. So you might be asking, why is this such a big deal? Well, because one of the biggest worries hanging over the stock was that profit margins were going to get squeezed by things like tariffs. This guidance raise just blew that concern out of the water. It replaced that negative story with a much, much better one, a story of growth that's not just getting faster, but more profitable too. Now, to be fair, it wasn't all sunshine and roses. The Q&A session with analysts gave a more balanced picture. The Da Vinci 5 is clearly a huge win, but they also mentioned that China is still a tough market and that the new weight loss drugs are still having an impact on the number of bariatric surgeries. Okay, so let's put all the pieces together. We've got the massive beat, the confident guidance raise, and this whole narrative shifting under our feet. What does it all mean going forward? Let's get to our official outlook. So what's the call? Is this incredible momentum going to continue, or was this just a fantastic one-off quarter? Where do we go from here? Honestly, when we look ahead, we see a lot of reasons to be optimistic. The momentum from the new Da Vinci 5 is really just getting started. The fourth quarter is also usually a strong season for medical procedures. And this amazing performance really sets them up to issue some very strong guidance for 2026 early next year. So for us, here at Talk Tickers, the call is simple. It's an outperform. This was a textbook beat and raise quarter. It reset the growth story and wiped out a lot of the biggest concerns investors had. When you combine accelerating fundamentals with improving sentiment, that points to continued strength for the stock. And of course, just a final reminder, this is not financial advice.